Now I know some of this might upset you, but let me tell you about this scenario that I just ran into. A buyer just reached out to me and told me that they were looking to buy a home for the first time. They already spoke with the mortgage lender and they found out that they qualify for the conventional and the FHA first-time homebuyer mortgage. Now, they didn't really know what to do from there, so they came to me and asked me for advice about which loan they should use. You know what I told them? I told them that they should actually skip out on that first-time homebuyer program, don't use that FHA loan, and just go with the conventional because the conventional loan would be better for them. What? You can imagine the buyer was pretty shocked to actually hear me say that. But FHA is a first-time homebuyer program. If I'm a first-time homebuyer program, shouldn't I take advantage of all the programs that are out there available to me? Isn't that kind of like passing up free money? I told him I understand all about the first-time homebuyer programs, but it's still better if he just went with the conventional loan. It'll be a lot better and easier for him in the long run. Now, before you guys go off on me and tell me that I'm giving them bad advice, let me break down both the conventional loan and the FHA loan so you can have a better understanding of what each loan does and why I would say that in his scenario, he's better off using a conventional loan versus an FHA loan. And also, if you have any other real estate scenarios or want more real estate content like this, don't forget to hit that like and that subscribe button. Now, let's break down the difference between conventional loans and FHA loans. First, let me talk about what a conventional loan is. A conventional loan is pretty much your everyday average mortgage. It's the mortgage that your parents used to talk about when back in the day you had to put down 20% or save 20% of the purchase price for the down payment. Flash forward to today and that is absolutely not the case. There are a lot of lenders out there that have conventional loan programs where you only have to pay 3 to 5% down payment. So it's a lot easier to be able to afford a conventional mortgage now than it was back in the day. Even though you don't need as much for a conventional loan as you did back then, the requirements for a conventional loan are still tougher than other loans. To qualify for a conventional loan, you need at least a 620 credit score for most lenders, and some lenders even require up to a 640 credit score. Also, your debt to equity ratio has to be 36% or lower. Now, what is debt to equity ratio? Your debt to equity ratio is your total monthly debts divided by your total pre-tax monthly income. An example of debts that count toward this ratio are car loans, mortgages, credit card payments, stuff like that. Pretty much anything that you have to borrow money for and you're paying monthly payments on that. That counts towards your debt to equity ratio. Not all of your monthly payments count towards your debt to equity ratio. For example, rent would not count towards that ratio, or neither would things such as utilities or phone bill or cable bill, anything like that. The only thing that counts towards your debt to equity ratio are monthly debts you are paying because of money you borrowed in the past. Here's a quick example of someone's debt to equity ratio. For instance, let's say a person has a $1,000 mortgage, they pay $300 a month in a car note, and they pay $100 a month in minimum credit card payments. Now let's also say this person makes $40,000 a year. If you add their total monthly debts, you'll get $1,400. And if you divide the $40,000 that they make a year by 12 months, you'll get $3,333. Now, if you divide $1,400 by that $3,333, you'll get the ratio, which is around 42%. In this example, this person actually would not be able to qualify for a conventional loan because their debt to equity ratio is too high. So with that in mind, let's take a look at FHA loans to see what they do. The FHA loan is the first-time homebuyer loan that you hear a lot about. The FHA loan is actually backed by the government, so it has lower requirements than the conventional loan. Because of this, this allows buyers to actually be able to afford a home when they otherwise wouldn't be able to. The credit score requirement for an FHA loan is 580, which is lower than the 620 that's required for the conventional loan. FHA has a debt to equity ratio of 43%, which is higher than the 36% that's required for the conventional loan. So if we go back to that example, the person would actually be able to qualify for an FHA loan when they otherwise would not be able to qualify for a conventional one. If it is so much easier to qualify for the FHA loan than a conventional loan, then why in the world would you ever want to use a conventional loan in the first place? Why not just always go FHA, right? The thing about FHA loans is that the interest rates are higher than when compared to conventional loans, which means that you'll be paying a higher monthly mortgage. Also, the FHA loan requires that each home goes through an FHA inspection, and that means that not every home will be able to qualify for an FHA loan in the first place. You don't have that issue with conventional loans. You're able to pretty much buy whatever home you want. Lastly, the FHA loan requires you to pay what's called private mortgage insurance, or PMI. That private mortgage insurance will cost you about $100 a month, so that's just another extra fee that's tacked on to your monthly mortgage that you would not have to pay if you had a conventional loan. Now back to that situation at the beginning where I told that buyer that he should go with the conventional loan instead of going with the FHA loan for first-time home buyers. I explained to that buyer that the conventional loan would be better for him because since he already qualified for it, he will be able to qualify to get lower interest rates, which means a lower monthly mortgage. And that would mean more money in his pocket over the long term because FHA loans would cost him a lot more over the long term because of the private mortgage insurance and the higher interest rates. The amount of money he would need for the down payment was pretty much the same with the conventional loan as it was with the FHA loan, so that wasn't really a factor to him. Therefore, since he qualified for the conventional loan, he should take advantage of those lower interest rates and save himself a lot of money over time. Let's not forget that with the conventional loan, you don't have to worry about the home passing that inspection. So that means you have access to a lot more homes. And that's another reason why sellers like conventional loans better, because they don't have to worry about making any FHA related repairs. As a buyer, if you find yourself in a multiple offer situation, which in this market with the inventory being so low that's likely to happen, you'll be so much better off if you have a conventional loan than if you had an FHA loan. You just have a leg up on the competition. That's why I believe it will be so much better for that buyer to go with the conventional loan instead of the FHA loan. A lot of people make the mistake of assuming that just because FHA program is for first-time home buyers, that it's automatically the best option. What they don't realize is that FHA charges higher interest rates, so that's how the government compensates for having those lower requirements. The FHA program is really only designed to help those afford a home that otherwise wouldn't be able to afford one without it. And to be able to do that, the government charges for it. Therefore, if you are able to afford a conventional mortgage, or if you are able to qualify for one, the terms for a conventional mortgage are always going to be better than the terms for an FHA loan. So in what situation would you use an FHA loan? Well, I can think of two main reasons that buyers use an FHA loan. The first, I already briefly mentioned, is that you would use an FHA loan to be able to buy a home when you otherwise wouldn't be able to because you can't qualify for a conventional loan. FHA allows you to get into the game and be able to afford to buy a property when you otherwise wouldn't be able to. The second reason is because since FHA allows a higher debt to equity ratio, you can afford more of a home with an FHA loan than you would for a conventional loan. So say if you qualify for both and you run across a home that you love, but your conventional pre-approval isn't high enough, then you might be able to switch to an FHA to be able to afford more of a home, and that might allow you to be able to bid on that home that you want. To break it all down, I'll summarize it like this. If you can qualify for a conventional loan, always go with that. But if for whatever reason you can't qualify for a conventional loan and you still need to buy a home, that's when you look into the FHA first-time homebuyer program, because that will help you to buy a home in a situation where you otherwise wouldn't be able to. Alright guys, that was my video on conventional loans versus FHA loans. Any questions or comments, feel free to reach out to me either through the comment section or through my website, which is BaileyAcresProperties.com. Once again, my name is Rob Bailey, Realtor in the Chicagoland area with ARNI Realty Inc. Thanks a lot guys. Have a good day.